Hey guys, with the start of the new trading week, that long-forgotten sense of overbought conditions has returned to the crypto market. But what remains absolutely unchanged is that this only applies to Bitcoin. And when the market reaches this kind of stage, I almost always consider a trap scenario for the side that initiates the move. That's exactly what I'll show today. Fear and Greed Index is at 73, firmly in greed territory, and Bitcoin is trading just above 108,000. Over the past several months, I've developed a very clear pattern in my head. When I see this, I'm not happy at all. In fact, it concerns me deeply because it significantly increases the chance and risk of a bull trap. That could flush the Fear and Greed Index down to around 50 or even lower. And of course, in the case, it will start affecting altcoins as well, because so far only a handful of altcoins have even responded to this move. Most of the others are still sitting at extremely low levels. That's the kind of setup I'm seeing on Bitcoin right now, but to be fair, it would probably make more sense to shift this whole structure slightly to the left because we're already starting to see something similar play out. And if we switch over to the daily time frame, we'll see it's much more illustrative there. There's this large candle which by itself created a significant price inefficiency, and the candles that followed could act as the first step before a deeper correction begins down into the zones of previously marked imbalances. Speaking of imbalances again, there are several concerning ones I'd point out, though they're only relevant locally in the short term. And an important note here, these are only alarming if you're looking to enter local long positions and hoping to do it risk-free on the calm vibe. That calm entry is no longer possible here. We swept the high from June 16th, and after that, price started forming several downward imbalances. So far, they've filled the first imbalance of the structure that initially broke through and swept the June 16th high, and price is still trading above that zone. But now the price is once again printing similar imbalance candles, and this raises a few technical questions. If we get a pullback to the 106 to 105k region, will that be enough to complete the correction? Or will we continue further down to fill what can reasonably be filled down at 103k? In the current market conditions, imbalances are a very hot topic because we've left quite a few unfilled on the way up as we build this bullish leg, this upward trend. And on this weekly chart, I've highlighted the key zones, the most significant price action areas that occurred around imbalance zones since October 2023, starting from $27,000. And it's exactly those imbalances from 27,000 to 34,000 that create this broader uncertainty because they've set a precedent in the market that imbalances can remain unfilled and the trend can still continue moving up regardless. Then we saw the balance get filled at 38k, but again 42 to 47k wasn't filled, 48.5k and 54k were filled, 69 to 78k was partially filled, and now from 78k to 97k we're in a situation where you could even do something totally crazy, like redraw the imbalance boundaries entirely. This area hasn't been traded at all, so it's quite a strong factor, at least visually, graphically. A local move, a local correction down to 106.5k would be justified by liquidations totaling around $133 million. But the situation is roughly mirrored at the higher price levels, so locally, Bitcoin might still show a few surprises. And it's even strange that with such a price inefficiency from 79,000 to 98,000 across the daily to weekly time frame, the liquidation map numbers look roughly the same. So yeah, we see that up to 103k, everything looks more or less the same. And below 103k, there's liquidity that usually gets taken out by a short-term wick. So the situation on Bitcoin is genuinely interesting. As for Ethereum, Ethereum has partially filled its daily imbalance. And now's the moment when the price, after a false breakout of the range boundaries, has returned to the lower zone of that range. And by doing so, essentially confirmed that we are possibly really observing a trading range with boundaries from 2300 to 2800. And these kinds of ranges trade from one boundary to the other. The price is following exactly the pattern of that sketch that I marked in previous videos, but nonetheless, imbalances, imbalances, and more imbalances, which at least locally are catching the eye. Solana swept the low from March 2024, broke through a major order block, broke through a key structure forming high, did a retest of it, and now we're basically seeing a retest of the order block and some price consolidation on the daily time frame. I'm holding Solana long-term in my spot portfolio, and I plan to consider futures positions in the near future. And today I'll also add Pepe to the analysis. Pepe is the king of all meme coins, the king of trader pain. After an 80% correction, we saw a pretty solid price rally of 170%, but now the price has returned to fill a massive imbalance, and now Pepe is trading inside that imbalance, and within a technical consolidation pattern, most likely, hopefully, it will break this pattern to the upside, not to the downside. In any case, activity is returning to the market step by step, very slowly, very uncertainly, but at least something is happening, and that's already a good sign. There are many new trades ahead, many new setups ahead. Subscribe to the channel, support the video with a like, and I'll see you in the next video.